Trading zero DT options is potentially very lucrative, but it's also very challenging to do it right. In this video, our head of options trading teams up with an expert indicators trader to create a powerful timing strategy for trading zero DT options using the MACD indicator. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005 and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from professional proprietary traders on our desk so you can grow your trading account.
Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk here in Manhattan. And one of the most frustrating challenges for a trader is when you're seeing a trade unfold that has all the elements that you want to see for a potentially awesome trade, an A-plus trade, but you're paralyzed with inaction because you don't know the exact right time to enter the trade. And then, before you know it, the stock has done exactly what you expected it to do, but you never pulled the trigger, or you pulled the trigger way too late and caught only a small part of what could have been a huge trade, all because you were confused about where to enter the trade. And if that sounds like something you've gone through personally, then you're going to want to stick around, because we're going to give you a tool in this video that could be absolutely invaluable to you once you've learned the simple technique for how to apply it. In order to explain how to use the MACD to trigger a zero DTE options trade, if you're brand new to options and you don't know much about options or how they work, we've created a video for you to understand the basics of option strategies. And if you click the video appearing on your screen right now, it will lay the groundwork for you to understand what we're going to be sharing with you in today's video. Then when you're finished, you can come back and watch the rest of this video. Okay, so I'm here with Garrett Drinan, who's our resident expert on trade indicators, and he's going to be breaking down a few NVIDIA trades that our desk was recently involved in to show you how all this works. So Garrett, why don't you go ahead and jump into explaining how the MACD indicator can be used to trigger trade entry on a trade that is clearly setting up for a potentially big gain.
So yeah, we're going to talk about the MACD as an entry signal in a trade, as Seth pointed out, a trade that is already in our playbook, a trade that's A+, right? Everything's triggering, all the variables are lining up, and we just need an entry, right? So we're going to use this in a momentum trend trade strategy. We're only using the MACD for an entry signal, and these are going to be MACD settings that are custom. They're not going to be the stock settings, right, in an A+ momentum trade. And so if you're looking to get more systematic, if you're looking to get a little bit more patience on your entry and a clear trigger for an entry, this might be an answer for you. So why are we even using the MACD? Why are we even thinking about this, okay? You might be the kind of trader that does a great job of identifying significant opportunities, right? And you see these opportunities, right? You're there, you're watching the stock, you know a stock is breaking out, but maybe you struggle to execute. Maybe you just missed the initial break, and now you're watching the stock thinking this is an awesome opportunity, but now I don't know where to enter. There's a secondary opportunity in a lot of these types of trades, right? Or maybe you just want to be more systematic. So you just want a more systematic approach to how you're entering the trades, or you're even looking to automate something. And so in these cases, we can use the MACD to our advantage. So here's the setup. And this is really key, and I want to stress this because we have significant playbook setups here that we're going to go over. And they're A+ or A setups in and of themselves. And I just want to stress that because this is not a MACD strategy. We're not just taking this signal in the MACD every time we see this signal on our charts. The setup comes first. So what is the setup? We have a momentum stock. In this case, it's NVIDIA, and we're going to show 2 examples. It breaks key support or resistance by 10 a.m. on higher than average volume, preferably 2 to 3 times its average volume, right? And at that point, right, it's breaking out on higher than average volume. It's a momentum stock. And in one of these cases, we even have the whole sector in our favor. Now we look for the MACD signal. So let's go over the trade. Here's what we are going to do when we look for the signal. We're going to wait for the break, like we talked about, really key, right? Now we're going to look for a new momentum high or low in the MACD, and I'll show what that looks like. And then we're going to wait for the MACD to return to 0, and then we're going to enter on the MACD cross after it returns to 0. So here's our setup. So here's NVIDIA on April 19th, and you can just see clearly there that it has a big level on the daily chart that it broke down from on this morning. So if we go to the intraday chart on this example, we're just going to show the MACD with the price chart just so you can see what it looks like. And what the MACD is measuring is the distance between two moving averages. And that's all it's really doing. And so it's giving us a feel for how far away the moving averages are, and that happens when price gets stretched, right? Or how close the moving averages are, and that tends to happen when price compresses or pulls back. So in this case, with the MACD, you can see the MACD line returns to 0, and that's when the moving averages will converge, and the MACD line extends away from 0, and that's when the moving averages are going to be spread out. So quickly, let's just go over the settings that we use. So Jeff and I recently did a video where we talked about a MACD setup, and we use custom settings, and we can link that below. These are the same exact settings. Right, so we have the fast length as 3, the slow length as 9, and the MACD length is 5. All right, so same exact MACD. And if we zoom in on the price with those moving averages on the chart, just to demonstrate what the MACD is measuring, you can see the 0 line is that black line on top of the MACD there. And then you have the MACD line in blue. And then in that pink color, we have the signal line. All right, so you can see that when those moving averages get spread out, that MACD line is getting further away from 0, right? It's moving down lower away from 0. And then when those moving averages start to converge, that MACD line will come back up and touch 0. And so this is what we're looking for in the indicator. We're looking for a surge in the MACD away from 0, a new momentum low, which is what we're getting here, right, on this initial break. And then we're going to wait for that MACD to come back up and touch 0, which it does on that first vertical line on the chart that we show, right before the pink circle. And the pink circle is our entry. That's when we get the MACD cross. It crosses back through the signal line after touching 0, and there's our entry. And so if we zoom out and look at the whole day, we can kind of see where our entry is in the context of the chart. And again, just using the MACD, we can't expect this kind of follow through. This kind of follow through is coming because we're in a powerful setup. We're just using the MACD for this entry signal. And in my opinion, something like this sometimes can give me some patience, right? Because when you see that break, you want to get in. And if you kind of shorten the hole, sometimes like it pulls back, and then you get shaken out when there was no reason to. So this is sort of a way to wait for it, to spend enough time consolidating and pulling back for it to be ready again to make another move.
Okay, Garrett, let me jump in here at this point and show everybody how we could have taken the signal that day with a very simple trade, nothing exotic. And this is all premised on the fact that you have told us that this was a potentially powerful trade. This was an A-plus trade. Well, when we have a trade that's an A-plus trade like that, what we're going to be showing you would be a very advantageous structure for your trade. So let's focus here with NVIDIA trading at 819 at this exact point you were just pointing out where the cross took place on the chart. And we're going to go ahead and buy 4 out-of-the-money put options expiring that day at the 810 strike price on NVIDIA's options chain, the 0 DTE options chain. As you can see from this slide, we bought the 810 strike because the 810 put was what options traders refer to as the 30 delta put. You see, an options delta is a mathematically arrived at prediction of how much an options price is likely to move based upon how much the stock from which it's derived moves, which in this case, of course, is NVIDIA stock. And traders around here like to use the 30 delta options because they're usually far enough away from the stock's current price that they're not too expensive, while at the same time being close enough so that it's realistic to think that the stock could reach that price and beyond by the end of the day, resulting in a potentially big win if it keeps running. Any broker platform that provides you with options trading capabilities, by the way, will have a delta column that you can choose to display each options delta on every options chain that you trade. Now, just to be clear, if you had bought 4 8-10 puts at 11.15 that day when the crossover took place, they would have cost you $2.63, as we saw on the options chain. But remember, each put option represents the rights associated with 100 shares of NVIDIA stock, so you multiply that price by 100, and you bought 4 of them, and so the resultant total cash cost to you would have been $1,052, as you can see from the calculation. And so moving to the end of the day, we can see, as Garrett just showed us, that NVIDIA had sold off substantially after we entered the trade. And so the puts, of course, the prices on those went up. They get much more valuable as the stock approaches the strike price and goes beyond it, which is the case with these 8-10 puts. And so at the end of the day, with NVIDIA closing at 762, 48 points below those 8-10 puts that we bought, if we now take a look at the options chain, you can see the 8-10 put now has increased massively in value to 47.20, which makes sense, right? Because if you decide to exercise the put at that point, you could sell your shares of NVIDIA for $48 more than they're trading for in the open market. In other words, you could sell them at 8.10 because the put seller is obligated to buy them from you at that price. And so it makes sense that the right to sell those, the option, is worth about $48 at the end of the day, which is exactly what happened. And so calculating the final profit on the trade, we subject the current price to the same kind of options calculation, which resulted in a final value of the puts we bought of $18,880, and then subtracting out the trade's original cost results in a final profit of $17,828, which is not bad for a 5-hour trade where our trade entry was pinpointed by using the MACD indicator, as Garrett pointed out earlier. Okay, so Garrett, I know that you got another example of the use of the MACD trade on another NVIDIA trade, which happened to be exactly a week later on the next Friday. So fire away.
These are actually two very different trades, and I want to kind of point out the difference because the trade that I just covered there, right, this is a trade we took on the desk, right, the trade that Seth just broke down with the puts. This is an actual trade we took on the desk, and we had SMH in our favor breaking down. We also had SMCI with a big breakdown on this day. High volume in all of these stocks, right? So there were so many things in our favor for this type of trade, and it was absolutely A+. So this is, in fact, something that we would be buying those 0 DTE puts in. Okay, this next example I want to show is also a good trade. It also had a clear level, but it wasn't quite as great as the first setup, right? And this happens when we're trading. We kind of have to grade our trades and risk appropriately and stuff like that. So we had a clear level, but NVIDIA wasn't doing exceptional volume. We had relative strength in NVIDIA, right? And it got above that 5-day range in a strong market on that day. So we kind of saw a relative strength play, right? We might not have had the entire sector running. We might not have had the volume, but we had a reason to look for an entry here. So we're going to look for that entry, but we're not necessarily going to look for the same magnitude of a result as we got on that first trade. So if we go to the intraday chart, we can see the MACD there down below makes a new momentum high on that initial drive, which was pretty powerful, right? And at that point, we don't want to chase the stock higher. We kind of want to look for that pullback. And in this case, and in a lot of cases, that pullback will happen through time instead of through price, meaning that it just goes sideways for long enough for the moving averages to catch up. And that's what happened here. So we can see that it took maybe 40 minutes, 50 minutes of consolidation before that MACD returned to 0, right? And that means that finally enough time has gone by and it's compressing. And then we get that cross back up where that pink dot is. And in this case, this would be our entry. And we might handle this a little bit differently because, like I said before, this setup is not nearly as powerful as the first one we showed. But nevertheless, it's still a trade, and we can still use that MACD as our entry signal if we're kind of looking for a systematic way to get an entry trigger.
All right, Garrett, so now that you've established that this trade is not an A-plus trade, it's a trade you want to take, but it's not something you're going to be necessarily putting all your chips in the middle of the table on, okay? So you've pinpointed for us the entry time based on the MACD indicator, but we're going to try something different this time. And there are tons of different kinds of option strategies, and every one of these strategies can be applied either bearishly or in this case bullishly, as this trade is actually based on a bullish premise, but a slightly more mild bullish premise. And so the trade we're about to show you is a trade where you're feeling pretty good about your directional bias that day, but you might not have quite as strong a conviction as we had on that first trade, for example, when perhaps more factors were in our favor. And so one of the highest probability ways of playing this might surprise you a little bit because we're actually going to be using puts in this case. Now, you're probably wondering, why would we use puts to express a bullish trade? Because we just showed you an example of how buying puts would have made an enormous profit when the stock went down. You were probably expecting us to show you a call option trade at this point, right? So let me show you how we can use put options to express a bullish trade. So let's say at that MACD trigger time, which Garrett just explained was 12:05 p.m. that day, we went ahead and sold 5 puts right below where the stock is trading at, those 867.5 strike price puts. And simultaneously, we bought 5 of the 857.5 puts, 10 points lower down the options chain. And so when we do this, selling a put higher up on an options chain and buying one lower on the same options chain, we are executing what options traders refer to as a put credit spread. Now, why are we calling this a credit spread? And the answer lies in the fact that upon entry, we're selling a put higher up on the chain, right below the stock's trading price. And so those options are going to be expensive because they will have value at the end of the day as long as NVIDIA closes below 867.5, that strike price. And so since it's trading so close to that price right now, not even a point above it, the right to sell your shares at 867.5 when they could theoretically be trading much lower by the end of the day is going to be really valuable. And so as you can see, we sold 5 of them, resulting in cash inflow of $16.50, which, because this is a margin trade, your broker is going to require you to have at least $3,350 in your account to execute. And so now, with $16.50 of additional cash in your account, let's move to the end of the day. And as you can see, NVIDIA had rallied over 9 points from when the MACD cross took place, a move that shouldn't surprise us because we chose that 12:05 trade entry time as it was ideal for the move we were looking for. And so how does our trade turn out exactly? Well, that's going to be pretty easy to figure out because starting with the cash flow of $16.50 that we just received at 12:05, in light of the fact that NVIDIA closed at 877.35, which is close to 10 points higher than where our short puts were located, then obviously those puts expire worthless. There's no value to the right to sell your shares lower than the stock's trading in the market. So that one just dies, as do, of course, the long puts we bought 10 points lower at 857.5. And so since both of the options expire with no value, we just get to pocket the $16.50 in cash as our trade profit. And so while buying a call is no doubt a bullish trade, we can also express bullishness by selling a put credit spread like we did in this case. But if you think a little deeper about the credit spread, you'll realize it's a much more probable trade, right? Because if the stock had never moved after our MACD cross occurred, which of course can happen in certain circumstances, what would have been the outcome? And the surprising answer is the exact same outcome, a profit of $16.50. Why? Well, think about it. We entered the trade with our short put strike right below where the market was trading, which, if you'll remember, was 868.13, just 63 cents higher than the short put strike price of 867.5. Well, let's suppose that the stock just didn't move at all and closed at that exact entry price, 868.13. Then, even though the closing price was only 63 cents above the short put strike price, the short puts and of course the long puts still expire with no value. In other words, at any closing stock price above the short put strike price, we make the same $16.50 as our trade profit, because at any price above $867.50, both options expire worthless, obviously. And so what we would like you to take away from today's video is that, assuming you have the right setup, that you've established your bullishness or bearishness on a particular stock and the magnitude of that conviction, the MACD indicator helps you to pinpoint a solid entry point for the trade, removing your doubts about whether you should feel comfortable with your entry price and time. On days where you're feeling highly convicted about a trade's direction, then outright buying a call or put might be your best strategy. Whereas on days where you might be feeling a little less convicted than normal, in those cases, then you could put on a put credit spread to express your conviction, but leave yourself plenty of room for error, so much so that if the stock doesn't move at all, you'll still get the full reward for the trade, all that positive cash flow. Professional options traders are trained to understand the probabilities, risks, and rewards of each options trade and which one to use in which circumstances, giving you the best possible chance for a high probability options trade, timed to coincide with the MACD crosses Garrett just shared with us.
Now, if you'd like to learn 3 more option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, and the options income strategy that allows you to make consistent money whether the market goes up or down or sideways, and how to make money on a stock or index trade even if you're wrong on the direction, then click the link that's appearing right now at the top right-hand corner of your screen. That will open up the free workshop registration page in a new window. So don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com.